Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This intraday analysis is for Wednesday, September 29th, 2010. Well, folks, it's just a few minutes past 2 p.m. Eastern Time. The markets are basically flat on the day, with the Dow hovering up 1.5 points, NASDAQ down half a point, and the S&P down about 25 cents on the day. So again, you can see a very flat market as the market continues to try to go down, but then you have the light volume effect, the POMO from the Fed, which is again the key purchasing done by the Federal Reserve that seems to be lifting or propping the markets up. The dollar continues to be weak at any time when the market starts to drop. All of a sudden, miraculously, the dollar begins to drop, and that lifts the market right back up. These effects have been keeping the market in check from really breaking down. You've seen it over the past couple days. I mean, it's been amazing, folks. Take a look at over the last 2 days what's been going on. You know, you had the big sell-off yesterday, the big drop here, and then all of a sudden the dollar started to cascade lower. You saw buy programs hit the NASDAQ 100 stocks. The market lifted up, and then it went sideways the rest of the day, closing fractionally higher. Today, the market gapped slightly lower, traded down, just about started to break down here, hit the 200 moving average, and just as that was hitting, all of a sudden the dollar fell off another little mini cliff, lifting the markets right back up. You saw a buy program again hit many of the key stocks out there, lifting the markets again and again. So this is a continual thing that we have to be aware of, and what I've said to my premium members in the Research Center, and I strongly encourage you to join the Research Center for this aspect alone, along with the other swing trades and the other analysis and education that we give, but you have to understand what is going on here. You can't expect the market to roll over unless you have better volume. Volume again today, 111 million, very light volume. This morning it was okay when the selling was around, but as soon as that selling dries up, the markets get lifted up. Again, we've seen the dollar effect come in, the UUP start to roll over, and that's just lifted the markets up beautifully. So watch for that, folks, and continue to watch for it. At any sign of increase in volume that is sustainable, and I mean sustainable in the terms of that it lasts the full day, and we do somewhere in the range of 250 to 300 million a day, which is going back to the more normal average in volume on the SPY, that's when you should see a sustained sell-off, but not until then. Until then, you look for continued neutral to slight upside action in the markets, okay? Neutral to slight upside. There are a few targets on the upside that we can look at. Number one on this intraday chart right here, you can clearly see right up here these two white lines are working unbelievably well. Twice today it was hit and a pullback. And again, let me just zoom out so you can see where these lines come from. You can go back till the 21st of September. Look at that, folks, all the way back here. That pivot top was what started this level right around 114.80 to 115 on the even number of the SPY. Drag those two lines across. Look at this on the 24th, 25th, the 27th, and then yesterday just below it, and today two more times again. Yesterday we pierced and went a little bit higher. That's what gives you that blue line just above right here. And that we have to watch, because if you get through these two blue lines on an intraday basis, that's your next stop. And then after that, you should be heading towards the 116 level. And again, this is all contingent on volume staying light and the dollar staying weak. If you see that volume start to increase, you better be ready, because you will see selling. Volume is very clearly only occurring when the market sells. And it makes sense, too. I mean, if you think about it, what's being done right now, the propping, it has to happen during light volume, as otherwise you couldn't have the same effect. You'd have to use too much money to prop the markets up. All right, now your levels today have been very interesting for a couple different reasons. I'm going to zoom in a little bit more so we can really see. First off, on the open of the market, you hit and pierced this 114.30, and I called this out to the chat room as being a major level right away, and again gave them the high-risk scalp to the upside. I said, listen, you can buy this level if you want. It's the opening candle, which is always a little more high risk, but it should work. Sure enough, the scalp was successful. The stock, or the SPY, moved all the way up 30 cents to 114.60, put it in the books. On the next candle, you ran all the way up to gap fill. At that point, I said, guys, this is gap fill. Gap fill represents a very solid level of resistance. You look for a little bit of a scalp short to the downside. After piercing gap fill by 1 penny, the market fell back down and came all the way down from really about the level of 114.67 all the way back down to approximately 114.45 for another beautiful scalp. The next candle, it continued to fall, came right back into this 114.30 level, which again was support. But one of the methodology points that I teach and I drill into our traders and our investors' heads inside the Research Center, which again includes everything at In the Money Stocks underneath the Research Center, unbelievably, a ton of information there. But one thing I continue to say, folks, is that you have to be aware that the odds shift. Probabilities in the market are always going to be changing. That's one of the things that you have to understand about any trade you're in. Every day, every second of every day, the probability of that trade working out will change. It's just the nature of the beast. So my thought process here, and this is something that I teach, every time you hit a level again, the probabilities decline of a successful trade. So yes, 114.30 was good, but it's a little less of a probable winner than it was the first time. And again, you can see this time it does bounce. Then the next time you come down, this is the third time down. Probabilities now are near 50-50, and that's where you break below it. All right, while you break below, you slammed into the 200. That's the next scalp we talked about, and I gave that out in the chat room again today. There were 3 beautiful scalps in the first, really 30 to 40 minutes on just alone on the SPY. You could have scalped other stocks, the Apples, the Amazons, of course, but just on the SPY, 3 scalps like that. You can see if you bought right there at the 200 at approximately 114.03, that was the low of the day essentially. Market reverses in one candle, you wind up all the way back to 114.25, 114.30, and then you continue to move up sideways and chop and then start to rally. Now, one thing I pointed out to my members, and again, I'll point this out as always, I won't go into what it is, but there's something here. You see how you break below the white trend line? Amateurs will think this is a breakdown, but instead, if you know the information regarding the proprietary analysis that we've created based on confirmation, you will clearly understand that there's no confirmation below the white trend line. Therefore, you do not expect a breakdown. In fact, you're looking to buy the 200 just like we did in the chat room and ride it up. And again, you look for that based on no confirmation to continue the upside. So clear as a bell right here, no confirmation. Bottoming tail as well, that's a bullish sign. 1, 2, 3 tail theory can be called as well, right in this order. That's another bullish proprietary technique we've developed. And these are all telling you the market has a good chance of going up. In addition, the volume is decreasing. Volume decreasing, that's another checkbox for the market possibly floating up. Sure enough, all these boxes are telling us the right way. Market does float up beautifully. You can see the rally begin, and we really go right back to the yesterday's highs or right underneath yesterday's highs. We pull back off of that. That's your shorting opportunity, folks. No brainer right there. If you don't know to short that level, then you're missing something, bottom line. Nice little shorting opportunity. Look at the pullback that takes place. You see how literally our methodology will dictate every high and low in this market on an intraday basis. And my point is this: for those of you out there that are swing traders, this translates perfectly to every single time frame. If you trade off of the daily chart because you're a swing trader, then just use the same things that we're teaching now on your daily chart. It will work bar none, 80-90% of the time, which is higher than anything else out there, including MACD stochastic nonsense, which again I think is mostly BS now because everyone uses it. When everyone uses something, it won't work. That's the bottom line. All right, so be aware of that, folks. The market pulls off this high. Now you're retracing. Remember, the first hit is always the best probability trade. That's your best short. Second hit, now it's a little more fishy here. You're not necessarily sure. Could you take it? Yes, but understand that the risks of you losing on that are a little higher. The first one, again, 80-90% success rate of a pullback, and sure enough, that works. Second one is probably in the range of 70%, and by the third one, if it doesn't, if it pulls back off the second one and doesn't break through, the third one is then at that point a 50-50 at best, and you have to be ready for a possible break. But nonetheless, you're on your second hit now. You can see it stalling right there. If you break through this area, you're going to go right up here on a break of 115. That'll be your next resistance point. All right, now in addition, the reason why the market rallied in addition here was you started to see that Federal Reserve intervention that has been going on through via the banks. Again, the TIPS buying program, the POMO, that's permanent open market operations by the Federal Reserve as they're buying tips and, infusing money or liquidity into the system, which in turn is being used seems to be being used to buy the NASDAQ 100 stocks and some of the other plays as well. There's some great moves on oil today, which is also helping the market stay afloat. That is what you have to be understanding of as well. In addition, the low pivot here, when the market started to really rip higher, that was all about the dollar falling. And miraculously, I talked about this at the beginning of the day in the video, and I've talked about this ad nauseum to my premium members in the intraday stock chat and in the research center. They have to understand that it's something that you need to be watching for. Anytime the market's about to roll over, the dollar starts to fall, again, in theory, being pressed down by the Federal Reserve as they control that essentially, and all of a sudden you'll see the market get a bid. Dollar down, market's up. It's that simple, folks, all right? And right now the spiders are barely positive, but they are up about 15 cents on the day, and it's really holding true to everything we talked about. I've told my members about the POMO, the Federal Reserve intervention, what's going on with the banks, and what looks to be going on and what's been talked about more and more about them intervening and kind of propping the market up here ever since really about mid-September or early September it seemed to start, and that's why you're seeing a lot of these stocks just not pull back. All right, now obviously there's part of it is short squeezing going on. There's a lot of different methods, but the bottom line is what's starting it is that intervention type issue. All right, now let's just take a quick look at a few other things here quickly. Oil, as I said, was having a big day. Take a look at oil. Oil inventories came out on a bullish side today, and oil just has ripped up ever since. Big move on the USO. That needs to be watched as well. That's helping stocks like Chevron move up 81 cents on Chevron today at the highs of the day. And again, that is helping keep the market. Chevron's a key component of the Dow, therefore, it is pushing it up. All right, other than that, folks, that's about it for now. Just keep in mind you want to join the intraday stock chat if you want information intraday, live analysis, you want to see our charts. That's what we show during the intraday stock chat. You can ask questions. We give out trades. We give out high probability possible swing trades as well. I mean, it's all in there in the intraday stock chat. And again, even if you have an hour a week, it's probably a smart thing because think about it as consulting. You know how much you can get an hour every day for a month for $199. In addition, the research center is just the biggest no-brainer in the world. No trader should or no swing trader should do without it. As again, you have everything from education, swing trade alerts, market analysis, hardcore levels on everything from gold, oil, the dollar to the markets and individual stocks. It's all inclusive there. Enjoy. Have a great evening, guys. I'll talk to you tomorrow. Take care.